Well, this afternoon for the equity markets, it continues to remain under pressure as we're sub the 11,800 mark. That's down 1.2% for the index. The broader markets too taking it in the chin. We're just going to walk you through some of the movers and the midday movers in trade today. Well, let's begin then with Reliance Industries. Those shares have dropped the lowest since the first week of September, and this is with respect to the ongoing case with the Future Group and Amazon. In fact, the Singapore Tribunal has now in the first round ruled in favor of Amazon, putting the 25,000 crore rupee future deal with Reliance Industries on hold. Both the firms have, as of now, have said that appropriate steps will be taken in order to ensure that the transaction proceeds without delay. But Aditya Birla Fashion as well on the back of this news is down in trade. Meantime, check in on Nestle. It's a result candidate, steady gains. The stock is one of the top gainers as it clocked in double-digit growth in their key brands, and this was largely boosted by the in-home consumption. You had a very strong set of numbers coming in across the board for Nestle in terms of its numbers as well. Revenues up 10% at 3,541 crores. The PAT was flat though at 587 crore rupees. Margins grew 115 basis points to come in at 24.9%, and their demand in their out-of-home channel as well improved on a sequential basis. Brokerages as well across the board continue to remain very positive on Nestle. Meantime, Aurobindo Pharma, that stock is buzzing in trade this afternoon, rallying before pairing its gains actually after the news came in that it's selling its unit to New Mountain Capital. Natrol, Aurobindo Pharma subsidiary, has in fact been sold for a sum of $550 million, and this is an all-cash transaction, and it still awaits the regulatory approvals, but it is expected to close by January of 2021. Polycabs is another mover in trade today. In fact, a fantastic mover on the back of numbers. The profits have come in higher by about 15% at 221 crore rupees. You have the revenues though, which are a little bit flat, down 5.7% at 2,113 crore rupees. Margins have come in at 14.8% versus 12.1%, and the EBITDA has grown 15% to 312 crores. That stock is rather active in trade. Meantime, Biocon in focus. You've got CLSA, which maintains a sell rating on the stock with a target price of 270 rupees. They're saying that the risk to the consensus earnings continues to remain and that the competition has risen in the first wave launches. In fact, CLSA believes that it is critical for insulin as well as glargine to deliver, and they've lowered the FY20 to 23 estimates by 4 to 1%. Meantime, Tech Mahindra as well is in focus after it delivered its quarterly numbers. You've got Morgan Stanley, which maintains an overweight rating on the stock with the target price at 980. They're saying that the strong margin improvement continues, which was significantly better. Management sees the growth outlook is very encouraging, and the revenue growth as well has come in above what the street was penciling in.